What's up, team? Oh, I've been talking for the last 15 minutes in silence, so hopefully it's not my computer.
Wait, can they hear?
Now they can. All right, so I'm going to repeat this, guys. Amazon did report earnings. They reported fourth quarter AWS sales of $17.8 billion versus the visible alpha analyst consensus of $17.3 billion. So they were up about 500 million more than expected. They also announced a price change that's going to go into effect on February 18th. So February 18th, they're going to have a price change. So Amazon Prime is going to be more expensive coming soon on February 18th. They said the price change is going to apply after March 25th. But it starts February 18th for new members of Amazon Prime. So basically, if you're an Amazon Prime subscription holder before February 18th, you're going to get it for your price is going to go up March 25th. If you're a new customer after that, then it's going to go up on that date on February 18th. We see Amazon rip it up, getting ready to break highs here, pushing up, ready to break highs. We'll see what happens. Yeah, we're going to see how much they're going to increase as well. And yeah, we're waiting for the earnings call. It's waiting now. Yeah, we got the call. It's supposed to start in 11 minutes. So the Amazon earnings call is supposed to start in 11 minutes. So we'll wait to see what they have to say. But yeah, They reported 40% growth for AWS in the fourth quarter. We're waiting for the Amazon call right now. It's supposed to be... All right, so Amazon.com Incorporated executives apparently were thinking that supply chain issues and staffing concerns would wipe away any of the holiday profit that they would made that would help them kind of do well during this earnings release. They were certainly wrong, as Amazon put in higher than expected fourth quarter profit of $14.3 billion or $27.75 per share on earnings of $11.73 a share in the holiday season a year ago, with $11.8 billion attributed to their investment in the Rivian IPO. If anybody saw the Rivian IPO, we could just put that up underneath this here for Rivian, and you can see Rivian here. Yeah, Rivian, even though it's kind of corrected in the last few days, it helped them in the last quarter fairly decent, I guess. And I don't know how I feel about Rivian, but they must have made some money from it, because that helped them swing to a little bit more than expected profit. So let me know what you guys think about Amazon. Must have made some... Yeah, I got you, David. Hey, I got a new mic too, so we should be sounding pretty solid here. My bad. Honestly, they dropped the earnings earlier than expected. We're sitting on here waiting for the call to start, which is in about 9 minutes. Carol, I'm trying to teach Carol how to do this, because she might be helping me with this in the future. So we're just kind of hanging out, and she's helping me with it. But yeah, let me go ahead and report this.
Can I put this down some or something?
Yeah, you can. It should be. You should be able to hear it. Let me drop this report so people can see what's going on. So yeah, so all right, so Amazon reported a 40% growth rate in AWS in the fourth quarter. We also have, let's see what else they have. Finding an Amazon Prime price increase. Effective February 18th for new members. What was the other numbers I dropped? I'm just trying to write this down so people can see it. We're waiting on the call now. It's supposed to start in 8 minutes. Yeah, they saw AWS sales come in at what it was. AWS sales came in at 17.8 billion versus 17.3. You know, it was 17.2. Let me see, what was it? It might have been 17.3 billion expected. That should be good enough. All right. All right, and let me know what you guys think. Are you holding Amazon both the same room and the kids haven't called your name? Honestly, they're not here yet. It's about to get cold over here.
Still at school. Here, when you put this up,
Yeah, sorry. You can always switch sides.
yeah, they're still at school, but school's closed tomorrow. So
yeah,
which is
I don't mind it though. It kind of feels like a school, like a snow day when the kids are not here. All right. Earnings call starts at 4:30 p.m. Eastern. Want to watch that? Made 1,000 on 20 shares. Nice, Kenny. Yeah, man. Amazon's expensive, but it's interesting to see here. I think we have some probable support at like 3,200 right here. I think 3,200. You know, we have an obvious resistance here at 3,300 as well. So I guess with stocks as expensive as Amazon, I think you're going to be looking at a lot of like $100 levels, as opposed to like double digit stocks that have a lot of $10 levels, like 30, 40, 50. And then single digit stocks, you're going to have a lot of like whole dollar levels, like $4, $5, $6. And so with Amazon being as expensive as it is, you're seeing $100 levels act as major support and resistance. So if you look at all the major support and resistance on the Amazon chart, you can see like the major ones are always at $100 level. Look, 3,100 is right here, so you can see the support build up underneath it right here. $3,200. So this one hasn't confirmed yet, but I bet you if it pulls back to this, it'll at least respect it some. And then obviously the high of pre-market at 3,300. So we're just moving in $100 levels right now. Yeah, the stock split is supposed to happen. Didn't they say it was a 10-for-1 split? So if it is a 10-for-1 split for Amazon, if it is a 10-for-1 split, then it's going to be roughly 3,230 divided by 10. And so it would be $3.23 per share. But I think they said it was actually going to be a 20 split, a split of 20. So it would be 3,230 divided by 20 here, which would make each share roughly about $162. So if that split happens, Amazon is going to become a lot more affordable for the everyday investor. And I genuinely think that's a great thing for Amazon. I think if Amazon wants to grow even more than it is now, then I think that they need to make each share more affordable, because unless you're trading on one of those niche brokerages that will chop the shares up and let you buy partial shares, I think the everyday person doesn't really want to spend over $3,000 to buy one share of Amazon, even with the amazing growth that Amazon stock has put in over the last 5-10 years. And so, splitting the stock, when they split a stock, it means they chop it up into more affordable pieces. Like, it basically means that they're taking, if it's a 1 for 20 split, or 1 to 20 split, they're taking one share and they're turning it into 20.
Yeah.
Or if it's a 20 to 1 split, they're taking 20 shares and they're turning it into one share. So the price becomes more expensive. In Amazon's case, the price is a little bit too expensive for a lot of investors. And so in that situation is that they would take it and chop it up into 20 pieces. Each share is going to get chopped up into 20 pieces, which again will equal out to about $1 or $161 a piece. Oh, 20 for 1 is Google. My bad. Yeah, it was Google, actually. Sorry, that is correct. So Google, let me see what Google would be.
Yeah, that makes sense.
So yeah, Google's 29.20. You can see why I get these two mixed up. And I know they had positive results. I thought that came out too. So 29.20 divided by 20 would make each share about $150, $146. Yeah. I mean, there's rumors of a split. We don't know if they're going to actually do it or not. But so the Amazon Prime increase is going up to $139 per year, $139 per year.
Has the earnings report?
So earnings came out, but we're waiting on the earnings call.
Yeah.
And so like the earnings are out, but we're just waiting on the earnings call. Yeah. Amazon did well because of Rivian. Yeah, 100%. I also think that Amazon is going to be a little bit more immune to, I think Amazon is going to become a little bit more immune to economic pressure that we've had during the last 2 years from, the C word and the pandemic and all that stuff. I think they're going to be a little bit more immune to it because I think that people might actually order more products from them while they're sitting at home with nothing to do. I know I looked at my bank statement yesterday and Carol's been buying tons of Amazon stuff. And so, you trade what you know. And I think Amazon is a little bit more immune than the average company for the current last 2 years situation. Yeah, no worries, Chris. Yeah, so if confirmed, the 20 for 1 for Google is going to be on the 15th of 2022. So I think that'll be good for Google as well. Amazon and Google are a little bit too expensive for the average investor. And I know some of that is by design from the CEOs, but I think more people will buy the shares, of course, if they're cheaper. And I think that's the logic that Google's taking, is that more people are ultimately going to be able to buy the shares, So we're waiting. The conference call starts in 2 minutes. I'm going to go grab some caffeine real quick. I'll be right back.
Yeah, I just got my coffee milk.
Yeah. Here, if you want to listen to that here, throw these on. You can connect both of them at once.
Okay. I can listen. I don't know what I'm going to listen to. Yeah, I'm pretty sure Amazon. I know that there's a in North Houston, there's a whole new Amazon facility. And it's big. It's a big old, the parking lot, it's almost like an airport parking lot. Just the parking lot itself is massive. Oh, well, thank you, David. But I come on here from time to time.
You stole my spot?
Yeah.
You got a chair?
Well, that one.
Oh, you're going to kick me out.
This is not very comfy. He said, wow, to gain more views, put beautiful wife on stream. Said,
yeah, dude. Honestly, I was trying to put her in the thumbnail, but I couldn't find. I was trying to put her in a thumbnail, but I couldn't find. I couldn't find my photo. My laptop. I got even my laptop here. I still could throw her in the thumbnail if I wanted to, but
Well, no, I was saying though, I come on here though.
She'll come on stream and say hey every now and then,
just
but
to hang out,
I'm trying to teach her about the stock market, so she can.
And I'm trying to understand more, and I pick up more and more.
Yeah.
Each day I pick up something new. So.
All right, guys. So this is when the earnings call is supposed to start right now. Let's see what's going on. Okay, still has not started yet. If you want the link to this earnings call, I'll post it right here. So if you want the link to it, I'll post it right here. You can check it out. Here's the link to the Amazon earnings call if you want to. Oh, wait, I can't post the link because you have to sign up yourself to get the link. So you can just stay here. I'm sorry, GT. My bad, bro. Look. Yeah, bro. Honestly, that thumbnail was, that was the plan. I kept telling Carol, I was like, look, you got to send me a picture.
Maddie just texted me. Well, this is connected to my phone somehow, and I heard this come on. Apparently now the AirPods talk. Like when you get a text on your phone, it'll actually read it out to you, which is kind of cool.
Yeah. The earnings call is not supposed to be in 30 minutes. It's supposed to be at 4:30. At least that's what they kept saying it was. Is this it? No, it's just other cheesy music. Well, we're waiting, man. We're waiting. Let me vote on the music. You want this music? Or you want the earnings call music? It says it's supposed to be at 2:30 Pacific Standard Time. Let me see when that's supposed to be. Yeah, if that's the case, baby, I'm going to have to stay here. Yeah, it's supposed to be right now.
Do you think they're at this time?
Oh, wait, it's not. So it's going to be in an hour, actually. Oh, man, wait. Did I start this too early?
Pacific it's Pacific.
I know, so it's 2:30 p.m. Let me see. Did I start this early? If I did, I'm dumb.
4:30. I think it would be like 4:30.
Yeah. It would be 4:30. Dang, dude, that's an hour. Okay, we're here early. I can always hang out here, but I gotta change the title. Yeah, so we're gonna have to wait. We could always start it up later.
Would y'all rather do a vote or something? Would y'all rather come back in a little?
Yeah, the earnings call apparently is in an hour. Yeah. So I'm going to delete this and come back in an hour. We could look at Amazon stock. Here's Amazon.
Unless y'all want to hang out. So
yeah, we'll stay if y'all want to stay, but we got to change the title now, unfortunately.
And I might go pick the kids up so that I can be here for...
Yeah, it's at 5:30 market time. There we go. Let me change that. All right. Yeah, Google already put it. Here's Amazon, though. Amazon is ripping up on these earnings. Yeah, we can do Amazon earnings and just watch it move. They did report earnings, so we'll stick around. I'll stick around, and we'll host the stream, and it's all good. Yeah, it's 5:30 Central. Yeah, Google reported yesterday. Yeah, for sure. All right. Yeah, that way you can be back. All right.
We gotta gas up. We still gotta get gas.
Yeah. I mean, I could always look for swing trades to get involved with. Or we could just start another stream. So, get over here. Hey, thank you, John. I appreciate you, bro. What's up, Pawn? Yeah, Facebook honestly just tanked the market, bro. Facebook completely crashed the market, dude. Traded a little bit earlier, but kind of got beat up, so we just didn't. Here's Amazon. We're gonna put Amazon chart up here. We'll just watch the earnings reaction. But yeah, they put in, like I said, if you read here, they put in 40% growth rate in the fourth quarter for AWS. They're also planning an Amazon Prime price increase effective February 18th. That is going to take effect February 18th for new traders, for new signups, and after February 8 or after March for existing Prime users. So yeah, I did not in green. I lost like $80 today. So yeah, we didn't earn $90. 87, 98, so 88. So yeah, we didn't. Well, we didn't lose a ton. I mean, it's honestly one of the roughest days that we've had. So, you know, it's all good. We made money yesterday. Where is this dumb earnings call, man? They lied to me, bro. They lied to me. We're going to mute this. Yeah, man, Amazon ripped up. Huge rips. Right, so we're going to put our own music up now since we're waiting for the Amazon earnings call. Is the music loud? I can turn it down. Let me know if this is better. Snap up. Yeah, I know Snap had earnings too. Let me see when the Snap earnings call is. Let me see. We could listen to that. Yeah, so Snap kind of needed it too, man. Snapchat showed the first ever quarterly net profit, up 40% today. So huge rip. Up from $25 a share, basically up to $36, right around where it's at now. So yeah, they reported their first profitable quarter on a net income basis as a public company. They reported, let's see what the numbers actually were here. Earnings per share were 22 cents per share adjusted versus 10 cents expected. Way better than expected, over 100% more than expected. 1.3 billion in revenue versus 1.2 billion. So we'll report this too. Yeah. Snap revenue put in 1.3 versus 1.2 billion expected. Earnings per share, 22 cents earning per share versus 10 cents expected. Their global daily active users, DAU, went up from 316.9 million expected to 319 million. Okay. All right. Arm it. Yeah. Okay. All right. Love it. All right, so average revenue per user, ARPU, is at $4.06 versus $3.79 expected. So just Snapchat blew everything out the water. They did better, way better than expected for Snapchat. They did way better than expected. So yeah, we'll see what happens. 319 million versus 316 or 317 million. We had an average revenue per user of $4.06 versus 3.79, according to Street Account. First quarter guidance range of 1.03 billion versus from 1.03 billion to 1.08 billion, which was higher than the 1.01 billion that analysts were expecting in that situation, according to Revenative. They expected daily active users for Snapchat to be between 328 and 330 million in the first quarter, which was again better than the analyst estimates of 327.8 million. Who owns Snapchat? Does Facebook own Snapchat? No, it's not owned by Facebook. It's owned by Snap Incorporated, which is not Facebook. Yeah, Amazon. I mean, Amazon fell back down a little bit, not much. This is a glitch right here. This is not a real candle. This is not real price action. This might be if somebody had like an order sitting somewhere that somehow got filled randomly, but it's not actual like price action movement. It could be, I guess, but it's most likely not. This is probably just a glitch. Yeah. Snapchat's their own company, which I think is better. Which is Unity, right? It's a video game company. All right, so we got about 50 minutes into the Amazon earnings call, so we'll just hang out. Facebook wanted to buy Snap around 2014, but they refused. What's up, Tony? Hey, thank you, brother. Yeah, y'all hit the like button, hit the subscribe button if you haven't already. Yeah, Snap ripping up, flying up. Snapchat had great results, like better than Amazon in my opinion. I mean, I think Amazon were really smart with how they specifically designed their earnings release to not only include the favorable earnings, but also include the price increase, which means that investors are going to be making more money and that Amazon's going to be making more money from Amazon Prime.
Okay, I'll download it
Right
now, but I need to go get the kids.
Okay. Yeah, so Amazon included the Rivian investment in their net profits as well, which is really smart. Yeah, and I think that's why I think a split would benefit Amazon. Yeah, if they split. I don't know if they will, but I think they should. And let's see how the market, I'm sure the market is favorable. I'm holding a few different investments that I'm hoping this Snapchat Amazon rally is going to ultimately affect in a positive way. I'm holding a little bit of Amazon in my IRA account. I'm holding DraftKings too, and a few others. So we'll see if usually big time like alpha companies like Amazon, Netflix, Facebook, you've seen in the last few days, a lot of the time those will affect everything else in medium to large cap world. And so, just Amazon and Snapchat having these really good earnings is going to positively affect the entire stock market for the most part. I would say 70% of the stock market is going to be positively affected by these results. Even Facebook right now, you can see Facebook is up on these. So, everything's kind of being affected by it, which is good. We kind of need this after the last 3 weeks with PayPal having bad results, Facebook with terrible results, Netflix. So a lot of these big companies have just been getting beat up in the market. And so it's good to see some companies do well because the market needs it. Yeah, that's probably true, A1. I'm guessing that's probably accurate. Pins is killing it too. Pinterest, man. And honestly, Pins has kind of proven me wrong. I kind of doubted Pinterest. And I mean, I think understandably so when you look at it from a long-term chart. I mean, I doubted this one in 2020, and it's, you know, a solid 60% lower or whatever that is. So I mean, I think I was right about Pinterest, but you know, Pinterest is stuck around, and I don't think the people that went public expected it to. What's the market cap of Pinterest? Let me see. Market cap of Pinterest is 17.8 billion, roughly 18 billion. So this is a medium cap. It's not huge, but it's not small either. Yeah. Look at Amazon, man. Amazon went crazy, bro. Amazon went crazy. What's your prediction about Apple and Microsoft? Well, I mean, I think generally Apple and Microsoft are going to do well. Long term, I think long term Apple and Microsoft are going to be fine. I think people use them too much in their everyday life to have anything drastic happen with those companies, and so I think they'll probably continue to make more and more money over the next 10, 20, 30 years. I think they're some of the best long-term investments. Microsoft, Amazon, specifically Disney is probably another one I would throw in there. I really like Disney. They own freaking everything in media. So, you know, I tend to be bullish on those companies. You know, the mid caps that are kind of a little bit more coin flippy, in my opinion. Yeah, I saw that. Tesla, I think, is a little bit more risk. I think Tesla is a great company, and I think it'll be fine long term. But relative to where it's currently priced, I don't know. I think it'll probably be fine, but you know, I think it's a little bit more volatile than all the companies I named. You know, so Tesla, I tend to love the company. If I could buy it, I mean, I could buy a Tesla right now, but we don't have any room in my driveway, to be honest. You know, and so I have to keep my truck because we need a truck, we need a car, and you know, we don't feel like having too much stuff. So, but if I had to get rid of a car, I'd get a Tesla. You can always pick those. So does everybody else. Yeah, I mean, I'm not claiming to be the best stock picker in the world. People just ask me what I thought about them. So yeah, like I said, I tend to think Amazon is going to be fine. You know, Google, Disney, you know, Apple. Those are going to be fine. Obviously, I think the more risky plays are companies that are less set in stone about their future. Baba 200, man. Baba, it's been a while since I've even considered looking at Baba, but I think Baba's so cheap. The problem with Baba is that they went against the Chinese government, man. Jack Ma said some things about the CCP, which, you know, if you're based in China, you certainly don't want to do, and he did. And now, you know, Baba has tanked, lost billions of dollars over the last, you know, year and a half, 2 years. But I think it's also kind of cheap down here. I think it's cheap, you know, relative to what the company actually does. I've been using Alibaba for a long time. And so I think great idea, great company, but the political struggles that it has with its country of origin makes it a difficult and somewhat vulnerable long-term investment, in my opinion. But I don't know. Yeah, it's too unstable for me, you know. Like, I think there's some great, you know, progressive, you know, brilliant tech companies coming out of China right now. I think the governmental aspect of it makes it a little bit more unstable because of regulation and other things, you know. But like I said, I think Baba's cheap. I think, like I said, most large cap companies are going to be affected by you know, the bullish moves in Snapchat and Amazon from probably Netflix. I don't even have to look at it. I can tell you Netflix is going to be up in after hours. You know, this is a good lesson if you're wondering, like 3 out of 4 large cap companies follow each other. And so unless it's in a specifically beat up sector that is moving different than the broader market, most of these companies are going to follow each other. And that's why the Amazon and Snapchat earnings. I was telling my wife, and my wife, she knows a little bit about the stock market, but I was telling her prior to this earnings release, I thought the earnings release was going to be bullish because I don't think that they're going to let it be bearish. Because if they let it be bearish, they can't change the numbers, but I think that if Amazon came out with a worse than expected revenue, worse than expected growth, worse than expected numbers, worse than expected guidance or outlook, I think that the market was going to just tank and crash. I thought the market was going to crash because it's just too many at once. Facebook, PayPal, Netflix, all in the last like 3 weeks, all had bad guidance, bad outlook, bad earnings, dropping 20% for most of them. So if Amazon was going to come out with some bad results, it would have been bloody, yeah, that's kind of how I feel. You can't charge Tesla when you have no power. Yeah, I'm in Texas right now, bro. I'm in Houston, so we're about to feel it. Honestly, my kids' school is canceled for tomorrow, so my kids don't have school. My kids don't have school, and yeah, we got the pipes running. We already went outside and wrapped all the pipes outside, and so we're expecting some weather. That blizzard a few years ago, man, that took us out, dude. That thing was no fun at all. Us Southerners, man, we can't handle that cold. I'm just not used to it. 40 degrees is cold for me. Yeah, thank you, Straight Ball, and I appreciate you, bro. Yeah, I almost bought honestly, Pawn, I'm super pissed, dude. Listen, I set a freaking alarm on my phone for 3:40 market time. 3:40 market time, I set on an alarm. You know what that alarm was for? That alarm was for me to go buy a call option before this Amazon earnings release on the SPY. I was going to buy a SPY call option, like a week or two SPY call option, and I would have banked tomorrow morning at the open, as long as it would have stayed bullish. I was so close to it. I set alarms for it and everything, but the snowstorm got me, man. We're trying to prepare for this snowstorm, and so I just didn't have the time and energy to want to go do it when we're doing all this other stuff. But I was so close to buying a call option, man. I was so close, dude. The earnings are dropping in about 40 minutes, Yeah, Amazon may have saved the SPY too. I think the tide might turn after the earnings call. In what way? You think we're going to drop, Georgie? What you driving over there, bro? What is that? Sophie has been being pushed down with the market, but it's due for a breakout. So far, DraftKings are my Super Bowl plays. Yeah, man, I'm in DraftKings, bro. I've been buying DraftKings the last 2 weeks, man. I think DraftKings, big company, marketed with a lot of big sports leagues. When right now it's a little bit quiet in terms of sports, and so I think people are forgetting about it. But I think once summer hits, baseball starts again. People are going to start doing some fantasy betting, and DraftKings is, people are just going to be more optimistic, pay more attention to it. I think the market is going to do better too. I think it's already down a lot. I think it'll probably rebound in the next, I don't know, few days. At least I hope it does. But yeah, DraftKings, I like DraftKings. I made a lot of money on DraftKings last year. I bought it at like $50 support and then sold it like 61, 62. Got out right in time on it. Mostly luck. I'd love to pretend it was skill. Corvette Stingray, nice, man. Hey, that's cool, man. I like Stingrays. Yeah, Rivian, AWS killed it, man. 40% growth. That's huge for a company their size, dude. So yeah, we'll be splitting our time between the next TikToks, Instagrams. Yeah, man. The Facebook. I think the real question about the market coming up is Facebook. Facebook. They've acquired a lot of companies. I know they own Instagram, and Instagram is doing okay. But I think TikTok's a real threat to them, man. I think TikTok's a real threat. I don't think most people use Facebook anymore, especially not young people, in terms of a social media platform. I think they might use it in business and interests, but not as a social media platform where they communicate with their friends and hang out. Not unless you're my age, you're over 30. If you're over 30, you probably do, like me. But I think the young people use other things, and I don't think that's good for Facebook. Facebook lost $10 billion on metaverse projects last year. But at the same time, if you look at their margins relative to relative to what they were spending, their margins are actually getting a little bit tighter. And I don't think a lot of people notice that on Facebook in terms of looking at it. But again, the question is, historically, the trend for social media has been every 5 years, roughly, a new social media pops up and destroys everything else in its wake. Now, I don't think YouTube is included in this, of course, mostly because, I live stream on YouTube, and I think that YouTube is educational as opposed to social media. I think this is different. But generally, every 5 years or so, there's a new hot social media that people gravitate to. 5, 6, 7 years ago was Instagram. At least that's when Instagram got really big. Then TikTok came 2-3 years ago, and I think that's kind of the wake in Facebook that we're seeing now. I think that's kind of why Facebook has been so affected by everything, is because people are just not using them as much. I know they have their Reels thing, but let me know what you think. Yeah, listen, I got 2 kids, bro. Listen, my daughter and I literally had the conversation. My daughter's 12. We literally had the conversation. My daughter said, she's in 7th grade. My daughter said that the other kids picked on anybody that says that they use or watch YouTube. And I'm sitting there like, wait a minute, like, kids are getting bullied. Like, that's ridiculous. Like, you can't learn anything in 30 seconds. Like, TikTok's cool and all, but you can't learn anything in 30 seconds. You can kind of learn, but dude, that is killing your attention span. You know what I mean? Like, but too many it's too many context changes in a short period of time to be good for you. And so I think people are always going to use YouTube because they can learn and it's educational, as opposed to these other more trendy, shorter social media platforms that play videos. But I don't know. I'm old. Let me think. Let me know. Hey, that's probably a good idea, Pawn. Honestly, and it's ironic too, because for Christmas, you know what I got my kids? I got my kids 2 Oculus Quest 2 headsets. The problem is I throw that thing on for 10-15 minutes and I'm nauseous. Play freaking, what was the game, man? What's the game where it's like Ender's Game, where you're running around throwing, catching the ball, trying to score goals? Echo VR. That game gave me a freaking headache, dude. We tried playing that game. Ugh. Yeah, we'll see. Yeah, for sure, Jack. 100%. They'll the definition of intelligence is your ability to obtain knowledge. It's basically how effective you learn, how quickly, how easily you learn things. And I think we are conditioning our kids to learn things incredibly fast. And so I think that's a positive aspect of it that's not taught very much. Kind of like the difference with, like, in my generation of kids, video games were only recently starting to become really big and widely used. And so I think those condition people to have really good hand-eye coordination. And I think now that's a norm with kids nowadays. And so I think there's certain little effects of all these things that we don't realize. All right, guys, we got about 30 minutes until the conference call. Amazon has mostly been consolidating between 3,200 and 3,300 for the last 30 minutes or so since we've been doing the stream. Yeah. Yeah, I mean, my kids can do a lot of stuff I can't do. It's one of the reasons you shouldn't underestimate young people, because I think as you get older, you become more rigid in your ways, and me included here. But I think that if you look at the richest people in the world, a lot of the richest tech CEOs are young people. Oh, for sure. We talked about this earlier. There's a difference between knowledge and wisdom and intelligence. Knowledge and wisdom is what you learn. Intelligence is how fast you learn it. But yeah, Amazon did report numbers here. We did report Snap revenue as well. Amazon adjusted EPS came in at 3. Came in at 580. Here's the Amazon fourth quarter adjusted EPS. Came in at $5.80 per share versus the $3.67 per share estimate. nowhere near VWAP, dude. What are you talking about? Amazon. Let's throw the VWAP up here and take a look at this. We'll see the VWAP and the previous closing price with this one. So look at that. So here's the volume weighted average price down here at 28.60. I mean, this is going to be different. This is an earnings release in after hours. So the VWAP's usually not going to be anywhere close. Previous closing price is right at, I don't know if that's even right, to be honest. Oh, you're good, David. No worries, brother. Where did you get those earnings? Couldn't find them anywhere. Benzinga. If you want to check out Benzinga scanners, I'll post this link. You can check them out. You can try them out for free for 2 weeks without even needing a credit card number. So if you ever wanted to try out Benzinga, you'll get access to a lot of the stuff I'm using to find this data. And here's the link. You can try them out for free. Right. I think one of the easiest, hey, no worries, incentive. Got you, man. Yeah, I think one of the easiest, I think young people make things too difficult. If I could go back to when I was 20 years old, I would save up and spend 10K and just throw it into stocks, bro. By the time you're my age, you're going to make hundreds of thousands of dollars and do whatever you want. You know, I think people tend to make things too difficult where it's like, you could try, like, I day trade, I swing trade, I day trade, I invest, I do it all, right? But it's far easier to start at 20 and throw some money down in an investment and, you know, make $500,000 by 30s as opposed to trying to just day trade year after year, making 100K a year, whatever it is, you know? I took one lotto put on eBay for tomorrow. My thoughts are profit taking will take place tomorrow and might drive the price down to my strike. Where's my thumbs up, gang? Hey, Bubba. Hey, good to see you, bro. Good luck, dude. I don't hate it, brother. I think that it depends on how eBay reacts to the earnings. So let's take a look at eBay. Here's the SPY. There's Snap. There's Facebook. Let's look at eBay. What's the strike price? Oh yeah, guys. Another way you can find some of these releases is if you have a Android, you can just download my app. I have a Squeeze app that gives you free short flow data and information. Really easy to understand. Gives you short flow data, volume, market cap, analyst ratings, SEC filings, and so you can download the app if you have an Android. It's right here. Check it out. You know, we got hundreds of people downloading the app in the last month, so appreciate you guys. Playing earnings one way is totally a lotto. Both ways is much safer. Still risky though. Yeah, for sure. I kind of did the same thing with my SPY option that I accidentally held overnight and I straddled it. It was the other day. I made a little bit of money when I sold it, but it wasn't. I still lost money on the overall on it. Yeah, Snap, man. Look at Snap. I think if we're looking at some levels here, I think that we got to look at this double top level right around $39. Like, look at this double top right here. I think that's really relevant. To see if it breaks that, I think we could move. All right, guys. So yeah, let me know what you think. Snapchat, are y'all bullish in Snapchat after these earnings? Snapchat is up huge. Whoa. Okay, see, look, you saw one of these glitches on the SPY just now happen. Look at the glitch on the SPY. So we get this quick little move down to 446, and then a quick move back up. And this is certainly a glitch. I've actually been stuck in one of those glitches as it happens, and it does affect your P&L like momentarily, and then scares the heck out of you, and then comes right back. So it's not supposed to snow; it's supposed to freeze. Yeah, 86% of their net profit was from Rivian. Yeah, it's an IPO of an EV company. I watched the IPO of Rivian. And if it's your first time joining us here, guys, listen, we stream live every weekday morning. So every weekday morning, starting at like 7 a.m. market time, we're live. We start the stream up. We talk about stocks. We trade the market open live on stream. Don't claim to be an expert. We don't claim to be gurus. We report market news. We don't sell a course. We don't sell a service. We show you guys everything. We don't claim to be experts. We have guests on that know options and all this different stuff. So if it's your first time here, hit the subscribe button. You know you want to. Yeah, so the jobs report. Let me see what the jobs report. I know it came out this morning. I think it was this morning. So for the jobs report, the USA continuing claims for January came in at 1.628 million versus 1.62 million expected. So a little bit higher continuing claims. Initial jobless claims for January came in at 238,000 versus 245,000. So a little bit lower than expected initial jobless claims, and definitely lower than last time, came in at 260,000. Non-farm productivity quarter over quarter came in for the fourth quarter at 6.6% versus 3.2% expected, prior revised of down 5.2% to down 5%. We had market composite PMI for January coming at 51.1 versus 50.8 prior. We had market services PMI come in for January coming at 51.2 versus 50.9 expected. Durable goods came in month over month for December at 0.3% versus 0.1% expected. We had USA ISM non-manufacturing PMI for January coming at 59 versus 59.5 expected. Factory orders month over month for December came in at 0.4% loss versus 0.2% loss expected, prior of 1.6% gain. And so, yeah, we'll see what happens. But Amazon's starting to pull back. It's at 32.55 right now. The earnings call starts in about 25 minutes. So we'll see what happens there as well. Yeah, I even dance once in a while on camera. Listen, you can pay to do push-ups too. Hold on. All right, guys. So Amazon's pulling back some. It's at 32.50 right now, 32.50. So if we pull back to 3,200, we'll see if we bounce off of that level. But the earnings call is starting in about 20-something minutes. So we're just kind of hanging out, watching stocks move, waiting for that. So, yeah. Let me know how the music sounds, guys. Does the music sound good? All right. Sorry, guys. Yeah, good to see you too, Bub. I hope you're doing well, brother. Yeah, we'll see if the ice happens, man. Like I said, the last blizzard that hit here was not fun at all, bro. The last blizzard that hit here, freaking, it was terrible. We didn't have power for like 4 days. The roads were completely frozen. We tried to go to a hotel. This is a true story. I literally paid for a hotel off of my phone internet, struggling, desperate to get out of the cold. We paid for a hotel. We drove in the ice all the way to the freaking hotel. It could have been a movie. It was like 25 minutes away. We drove in ice, like almost wrecking like 30 times to get to this hotel. By the time we got to the hotel was closed. Like they didn't have power either. And so they had power when we called them on the way, and then they didn't. So it was just a mess. I'm just hoping it's not like that. Yeah, Rosie's pretty good, man. You know, she's not doing bad. She does have to go out every 2 hours though. I don't know if it's just me, but I can barely see anything. No offense. Nothing against you, Don. Just refresh your screen, brother. What are your thoughts on AMC? I think AMC is probably going to be up, right? Yeah, so AMC is going to benefit from this. Like I said, AMC has kind of been following the market lately, and so I think AMC is going to benefit. Those are trades from funds that are on the tape that were executed early in the day. Okay, that makes sense. Ford taking a beating. Is it really Ford? Ooh, what happened to Ford, man? Let's look it up. So Ford posts 17.9 billion in net income, reversing year-end loss. Then why is it tanking, man? Were people already priced in? Why do you think Ford is tanking? So earnings miss estimates on persistent supply problems. So Ford came in at almost 18 billion in net income, but they still lost money. They still were worse than expected, is actually what this is. So the Ford CFO said that the company will still see challenges on volume in the first quarter of 22 amid the chip shortage, but they are improving, quote, significantly after that, especially in the second quarter of 2022. So Snap getting ready to break highs again here. Look at Snap. So Snap, after all these positive earnings releases, Snap is coming up. It's at 38.30s here, 38.40s. Man, Snap is still ripping. Oh, yeah, you got a puppy too, Paul. My bad, brother. What's up, Martin? We lost some money today, but our long-term investment portfolio is definitely doing better after Amazon. We're also going to see what DraftKings says. All right, guys. So the earnings call is in 20 minutes, team. Laugh out loud. This is fake. The earnings per share, including the Rivian stock, and lower their guidance, and it's up. I mean, bro, it's one of the reasons. Okay, I think a lot of traders get involved with the market, and this is a true story. So I think a lot of new traders get involved with the market. I'm not calling you new, by the way, PSN. I'm just saying. I think a lot of new traders get involved with the market, and what happens is I know when I first got started trading, I thought that every time a stock had good earnings, it would go up, and so if I could just wait for the earnings release, buy the stock. Easy money. I can just live off of that. You'll quickly realize in the stock market that it's nonsensical. Sometimes the stock will just have amazing earnings and just tank. Sometimes the stock will have terrible earnings and then rip up. And so sometimes the market is nonsensical, unfortunately. And I think Amazon, like I said, I think they designed their announcement and catalyst release very smart, including the price increase for Amazon Prime. I think investors are going to put 2 and 2 together and understand that Amazon is going to make a little bit more money with that Amazon Prime price increase. I think AWS grew by 40%, which is a really good number. And so I think all that included, I think it's a little bit more understandable on why they went up. Why did Amazon shoot to 31K? I mean, we know Amazon didn't, but I'm assuming you mean 72. That's a glitch or orders that were put in early in the day, so it's not real current price action. Why, brothers? So I wouldn't worry about it. Those are just glitches or orders that were put in. Snapchat just broke highs again. So Snap just ripped up over highs. It's currently at 89.20s. 89.20s. Yeah, I feel your pawn. I get it, man. All right, so the Amazon earnings release. We're sitting and waiting on the dashboard for this Amazon release. Still not started yet. Hike Prime means inflation is hurting. Yeah, I mean, I feel you, bro. But yeah, Snap's ripping, bro. Look at Snap up to 39.30s here for Snapchat. 39.30s for Snapchat. Huge rip. Huge move. Oh, for my futures trader, are y'all trading futures in this? I'm surprised more futures traders aren't just attacking right now, dude. Snapchat over highs again, man. And again, let's look at 39 underneath us. We went up to 39.50 almost exactly. So let's watch Snapchat. 39.50s, still pushing up, man. And understandably so. Snapchat had great results. Great results. They put in earnings per share EPS of 22 cents versus 10 cents expected. Revenue of 1.3 billion versus 1.2 billion. Global DAUs went up from 317 roughly million to 319 million. Average revenue per user, which is ARPU, went up from 379 expected to 406. So just way better than expected. Everything for Snapchat. Great numbers here. And yeah, they're ripping up. So we'll see what happens. But I'm sure Snapchat traders are banking today. No, I'm not saying you were new PSN. I always try to make sure, like, because when I'm telling traders lessons about how new traders are, I want to make sure that y'all realize I'm not calling you new. You know, you actually were able to identify the irony in that Amazon, you know, had a little bit iffy things and they still skyrocketed up. And so, you know, I didn't think you were new, but it's all good. What are the difference between futures and options? Well, they're drastically different. Options, you're buying and selling a literal contract, and you are in futures as well, but it's just different. Options are exactly how the name states it, which is options are the ability. You have the option to buy or sell something at a specific date for a specific price, right? So if you buy puts, that means you have the option to, you know, buy a specific stock at a higher price than what it will be in however much time relative to the strike price. If you buy a call option, you're basically trading the option, the contract for the option to buy or sell a security at a specific point in time. Futures are exactly how the name suggests it as well. Futures are betting on the future price of a commodity. And so there's cattle prices, coffee, gold, Bitcoin, crypto, any type of futures contract you imagine. What I think most traders are going to be banking on in the futures market is the E-mini and the micro E-mini right now. Those basically do what the SPY does. And there's no PDT rule in futures. So if you look at the E-mini contract, for instance, here, here's the E-mini, and then look at the SPY. So it's the same thing. And so if you're like me, who I scalp the SPY all the time, I scalp the SPY. It's one of the most highly scalped things in my portfolio is the SPY itself. The SPY, QQQ, you know, Apple, Disney. But in the futures market, if you want to get around the PDT rule and you want to day trade large caps, you can trade the SPY in the futures market with no PDT rule. You can day trade, short it, do whatever you want with it, with no PDT rule, instant settlement. And so that's the benefit of futures. And there's a lot of other differences and nuances behind it as well, but those are the main differences. Anyways, I use a platform called Top Step that funds people in the futures market. So they give you a demo. If you can hit their target on the demo while following the rules, they fund you. So if you ever wanted to try out the futures market without the risk of putting up thousands of your own dollars and try to get funded, here's the link if you want to check them out. You get 20% off, I think, through the link. So I'm going to do a shameless plug right there. Definitely an affiliate link. I'm certainly biased in their favor. You know, so transparency aside, we'll see what happens. All right, earnings calls in 13 minutes, guys. Okay, so I probably got to refresh the Discord link from Nightbot. That's probably what I got to do. That makes sense, actually. Yeah, I got you here. Hold on. I'll just grab the Discord link directly, brother. I got you, man. So here, if you want to join the Discord, here you go. So yeah, there's the Discord link if you want to check it out. I'm also updating the Nightbot, so where he posts both. Oh. Not seeing the 20% off. Oh, you should be. Let me see. I think you got to do it at checkout, brother. So you might see a specific price, but at checkout, it's going to be 20%. If not, if you try to check out and it's not there, just let me know. I'll give you a different one. Again, Discord error message unable to accept. Man, maybe it might be some rule. Let me see what kind of rules we got in play. That's weird. Let me see. Everybody try this link if you haven't joined our Discord, and let me know if you're having trouble with it. If we are, then we'll figure it out. Yeah, I hope we signed Carrera, bro. Carlos Correa, man, we need to sign him. I said Correa. I hope we sign him, dude. He's you know, if we lose him this year, which we probably are, it's gonna be tough. You know, I mean, we still got a lot of people, but you know. All right, so Amazon's testing the 3,200 level. 3,200. Snap testing $40 a share now, ripping up huge. Time for calls. I mean, I'm not really against call options. You know, I like options. Just I tried scalping option this last week, and I got my ass kicked, dude. I just got beat up trying to scalp options. It was no fun at all. I quickly realized, like, listen, I got a $30,000 account. I don't need to scalp options. You know, the liquidity is much worse. If I'm going to scalp, I'm just going to scalp the shares directly. I'm not going to buy an option contract and try to flip that in 30 seconds like I do. It's just not slippage, just beat me up. And so I quickly learned, not for me. Yeah, snap testing 40s. But longer term options, I think, can be very powerful. I think, like, if you're talking about an option for like a month from now, or really like a week or two option, I think buying bounces, selling them if they don't work quickly can be really profitable. Maybe I'm under block list in your Discord. You might be, bro. If you post random links, you will be. Yeah, I got beat up in options. All right, guys. So y'all ready? The earnings call is going to be waiting on the earnings call. It says, please wait. Yeah, still got the sleazy music. John, like I was saying, you like to get in and out too quick versus waiting for the play to work itself out. Yeah, but I mean, the reality of it though, Pawn, is that I make money doing that in stocks. You know, when I buy and sell shares directly, like I'll put it this way, all right? Like some of the moves that I profit from are this small. Like if we look at the SPY, for instance, right? Like some of the moves that I profit from are this small, where I buy the dip here, sell it here. You know, so I'm literally getting in here. If I edit this to make it green, I'm literally getting in here at the green arrow and I'm selling on the red arrow a lot of the time, right? So I can't really do that on options. They're just not liquid enough. There's too much slippage. I think options is great if you're like taking like a little bit longer term. So like if you were doing this instead, maybe, you know what I mean? Going for like 4 or 5 minute trade. I just think if I'm holding something for 10 seconds, it's just much more difficult to scalp in a liquid way where there's no slippage. Bro, don't say you have a 30K account. You just lost all credibility. So you're telling me I do not have a 30K account, sir? Okay, I'll put it this way, Samuel. I day trade live on stream every single weekday morning. I have gotten into trades that if it was a paper trade on TOS, it wouldn't let me. Anybody here can verify that. I mean, it's obvious I have a $30,000 account, bro. If you watch me trade it off, you know, it's not really something to brag about either. 30,000 is not a huge amount relative to like most big time investors or traders. You know, my channel is called Beginner Trading, bro. You know, but I 100% have a $30,000 account. Yeah, it's all good. Thank you, Camilo. I appreciate you, bro. Yeah, it's all good, man. Like I said, I think skepticism is good. You know, I think you should be skeptical because I think there's a lot of people out here that are slanging courses that's really mostly publicly available content for thousands of dollars. You know, kind of scamming new traders. I think that's happening very often in the stock market nowadays. And so I understand the skepticism. It's one of the reasons I don't claim to be an expert or try to act like a guru. Yeah, you can see. You'd be able, like I said, I'll put it this way. I have day traded live on stream for long enough at this point in time to where if I was trying to hide it and if I was actually paper trading, I would 1,000% have been found out by now. You know, like I have been literally day trading for 8-9 months every day. I've been getting into like 30 trades a day probably. And so if it was paper number one, I don't think you can paper trade pre-market, and I trade pre-market every day. Number two, it's just obvious. I mean, it's all good. Thoughts on scalping Forex market? I've never really tried. We're getting ready for the conference call, guys. So the conference call is in 5 minutes. It starts at 5:30 p.m. Eastern Standard Time. About 5 minutes. We're gonna be playing the earnings call live on the stream, Don. So we're gonna be playing it live. How come Amazon jumped so high after hours? Favorable earnings. I mean, they put in a 40% growth in AWS, which is Amazon Web Services, and so Amazon just had good earnings. Good numbers come out relative to what was expected. I think they came in at like 500 million over what was expected. I think it was like 17.2 was expected in terms of revenue. They came in at like 17.8, I think, or it was something like that. Let me find the actual numbers. I have them right here. EPS came in at 5.80, which was better than the 3.67% expected. But yeah, the earnings call starts in 5 minutes, guys. It's not yet started. Still hearing the hold music while we're waiting. So we got 5 minutes until the earnings call is released. But yeah, so the numbers here, let me find them again. Looking for the numbers here. Use TOS instead. Yeah, so Amazon put in there it is. Amazon fourth quarter AWS sales came in at 17.8 billion versus the consensus of 17.3. So they came in $500 million more than expected for AWS fourth quarter sales. This is nothing. I'm not using anything. This is just me removing this. So, yeah, that was just me. I added that directly. I'll put it this way, right? Y'all think I'm on a paper account? I can prove you really easily, right? Here's the SPY. So far today, I'm down just trading the SPY $45. I've traded about 2,000 shares, right? If I had a PDT account, if I didn't have over 25K in my account, watch. Let me show you this. It's super easy to prove, to be honest. Show trades. And like I said, we got beat up today in the market. So I'm not trying to claim we didn't. We lost a little bit. But these are my trades. So, I mean, you're going to tell me I don't have 25K in my account. Look how much I'm freaking trading, bro. Anyways, the conference is starting at 3 minutes. 3 minutes. Get that out the way so we can see. Did we move it? Oh, wait. There we go. Anyways, Amazon is up to 450s. We got Facebook. Amazon is up there to 3,200. SPY is up to 450s. Snapchat dropped down. Tested 40. I think 40 will be a big resistance. We got 2 minutes, guys, until it's supposed to start here. Yeah, I know. But I want to. Like, I understand the skepticism, to be honest. GameStop made a big deal today, too, pushing into the NFT market. What's GameStop doing? All right, so we're waiting here. The conference call is supposed to be in 2 minutes for the earnings call. So still waiting. It's supposed to begin in 2 minutes. What do you think of buying Snap at 37 for a scalp? Well, I mean, a scalp, brother, is, for me, a scalp's 20 seconds, dude. And so I really have no idea. I don't hate, if I'm being completely honest, in terms of like price action, I don't hate a dip down to 38 for a bounce here. But I don't really scalp pre-market. I think it's risky. It's just not something I do. All right, we're waiting on the call. It's supposed to start in 1 minute, guys. 1 minute. Still just kind of hanging out, waiting. All right, so the call is supposed to be starting pretty soon. Hanging out, waiting. I'm ready. Yeah, got you, man. How was your trades today? Oh, dude, I got beat up in the market, man. I mean, I lost like $87 or something like that, so it was a pretty small day. But yeah, not a good day, you know. Like I said, January I had 2 losing days all January. You know, the first 3 days of February have been brutal, to be honest. A lot of that profit went away, unfortunately. All right, so we're still waiting. All right, so here goes Snap dipping down. Yeah, man. Yeah, it's been brutal, bro. The start to February in the market has been rough, dude. It all started with Netflix tanked. And sometimes the volatility can be good for scalping, but I don't know, dude. The last 3 days it hasn't been. You know, the Netflix tank affected the market, made the market drop, and then PayPal, and then Netflix, PayPal, and then Facebook and Meta with the bad results. And then, you know, I think a lot of people were worried if Amazon was red, if Amazon had bad results and bad numbers drop today, the whole market would suffer. You know, the whole market would certainly suffer if it did, but I think it would have been worse. I was warning Carol, like, hey, if Amazon comes out with bad numbers, I was like, I don't think it will, but if it does, you know, you got to start preparing for big drops. Hey, for sure, David, bro. Just let me know, man. Anybody that comes on the stream, I got to get you to sign a contract, brother. Just making sure that you don't do anything you're not supposed to on stream. And so aside from that, bro, you're always welcome, man. Always like guests. If, you know, like I said, if anybody has trading content that they want, you know, if anybody wants to promote themselves and wants to, you know, do a show or whatever on my channel, they can. You know, we've got 3 different people we're working on that now with, but, you know, just message me on Discord or wherever. How was your trace today? Yeah. Hey, what's up, Satama? Good to see you, bro. Hodl. It's all good, man. Do you still use the moving average under VWAP? I mean, here, let me see. We're waiting on these numbers. All right, here we go.
Hello, and welcome to our Q4 2021 financial results conference call.
Let me make sure you guys can hear it.
Joining us today to answer your questions is Brian Olsowski, our CFO. As you listen to today's conference call, we encourage you to have our press release in front of you, which includes our financial results as well as metrics and commentary on the quarter.
We good?
Please note, unless otherwise stated, all comparisons in this call will be against our results for the comparable period of 2020. Our comments and responses to your questions reflect management's views as of today, February 3rd, 2022 only, and will include forward-looking statements. Actual results may differ materially. Additional information about factors that could potentially impact our financial results is included in today's press release and our filings with the SEC, including our most recent annual report on Form 10-K and subsequent filings. During this call, we may discuss certain non-GAAP financial measures. In our press release, slides accompanying this webcast, and our filings with the SEC, each of which is posted on our IR website, you will find additional disclosures regarding these non-GAAP measures, including reconciliations of these measures with comparable GAAP measures. Our guidance incorporates the order trends that we've seen to date and what we believe today to be appropriate assumptions. Our results are inherently unpredictable and may be materially affected by many factors, including uncertainty regarding the impacts of the COVID-19 pandemic, fluctuations in foreign exchange rates, changes in global economic conditions and customer demand and spending, inflation, labor market and global supply chain constraints, world events, the rate of growth of the internet, online commerce and cloud services, and the various factors detailed in our filings with the SEC. This guidance also reflects our estimates to date regarding the impacts of the COVID-19 pandemic on our operations, including those
We're sounding
discussed in our
good over
filings
here.
with the SEC. Our guidance also assumes, among other things, that we don't conclude any additional business acquisitions, restructurings, or legal settlements. It's not possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially from our guidance. And now, I'll turn the call over to Brian.
Thank you for joining us today. Let me start by once
Say
again
something good,
acknowledging
Brian.
and thanking our employees around the world for their efforts. This was the second holiday season during this pandemic, and it required exceptional collaboration and coordination among our employees and business partners to prioritize both safety and customer experience. The team did a great job of delivering for customers this holiday. Now let's discuss our fourth quarter financial results.
All right, here we go.
For the fourth quarter, net sales were $137.4 billion, an increase of 10% year over year, excluding the impact of foreign exchange. We continue to focus on offering the best experience for our customers across our businesses. On the consumer side, we welcome millions of new Prime members in both the United States and international during the quarter, while continuing to see consistently high member renewal rates across geographies. Our third-party sellers in particular benefited from strong customer demand this holiday season. 3P sellers provided 56% of all unit sales in the quarter, the highest fourth quarter mix ever. And AWS saw continuation of the strong usage and revenue growth we've seen throughout 2021. AWS added more revenue year over year than any quarter in its history, and is now a $71 billion annualized run rate business, up from $51 billion run rate 1 year ago. Even on a large base, revenue increased 40% year over year. As I've mentioned in prior calls, we also encourage you to look at the multi-year compounded annual revenue growth rate since the onset of the pandemic to better put this revenue growth in perspective. Despite lapping 2020's extraordinary sales growth, we continue to see an increase in customer demand and sales during the remainder of 2021, even as the economy opened back up. For Q4, Amazon's 2-year annual compounded growth rate was 25%, excluding impacts from foreign exchange, consistent with our rate in the third quarter.
Okay.
We've invested significantly to keep pace with this demand, including nearly doubling our operations capacity in the past 2 years, expanding our fulfillment center footprint while adding significant transportation assets to ensure fast on-time delivery. There are now 1.6 million Amazon employees worldwide, also doubling in the 2-year period. Our fourth quarter operating income was $3.5 billion. As we mentioned in the last earnings call, we did see more than $4 billion in costs from inflationary pressures and lost productivity and disruption in our operations. The inflation primarily relates to wage increases and incentives in our operations, as well as higher pricing from third-party carriers supporting our fulfillment network. Lost productivity and network disruptions were driven primarily by labor capacity constraints due to challenges in staffing up our facilities for peak. This was driven by the very tight labor market in the second half of 2021, and more recently by the emergence of the Omicron variant. We do expect these cost challenges to persist into Q1, albeit adjusted for lower seasonal volumes relative to the fourth quarter. Our results also include approximately $1 billion year-over-year negative impact from lower fixed cost leverage in our fulfillment network. Recall that we saw very high unit volumes for most of 2020 and the first half of 2021, and the fulfillment network was running at close to 100% capacity during this time. Now with more normal fulfillment capacity, our operating leverage decreases versus the comparable prior year periods. We'll expect to continue to see some negative year-over-year impact from this in Q1 of 2022.
So this is guidance
While we
right now,
navigate
guys.
these near-term headwinds, the fundamentals of our retail business are strong, and we are optimistic about a number of growth businesses and a strong innovation pipeline. AWS delivered another strong quarter of growth as enterprises and developers continued to look to AWS for critical, innovative cloud solutions. Now to $71 billion annualized revenue run rate, AWS revenue grew 40% year over year in Q4, our fourth consecutive quarter of revenue growth rate acceleration. We hosted our 10th reInvent conference in the quarter, welcoming 26,000 in-person attendees and hundreds of thousands who attended virtually. reInvent remains a highlight of the year for us because it's a great opportunity to introduce new services while engaging with customers and partners to better inform where we should be focusing next. We announced more than 115 new services and features during the event, as businesses spanning all major industries continue to choose AWS as their technology provider to speed up innovation in their organizations. In the past quarter alone, NASDAQ announced a multi-year partnership to migrate its North America markets to AWS, including their matching engine. Best Buy selected AWS as its preferred cloud provider for cloud infrastructure services.
Partnered with
Meta,
Best Buy
the
and
parent
Cloud.
company of Facebook, Instagram, and WhatsApp, selected AWS as its long-term strategic cloud provider to accelerate artificial intelligence research and development. And Stellantis, the parent company of Chrysler, Dodge, Fiat, Jeep, and
NFT.
Ram, selected AWS as its preferred global cloud provider for vehicle platforms to accelerate new digital products and upskill its global workforce. You can find more examples in our earnings release of how the world's largest companies such as Adidas, Goldman Sachs, Pfizer, Rivian, and more are using AWS to transform their businesses. Overall net income was $14.4 billion in the fourth quarter.
14.4 billion net
On
income.
operating income, I'd point out that this net income includes a pre-tax valuation gain of $11.8 billion related to our common stock investment in Rivian Automotive, which completed its initial public offering in November. Before we move to Q&A, there are 3 additional items I'll mention related to our disclosures. First, we are now separating advertising services revenue from other revenue as part of our revenue disclosures by groups of similar products and services. This updated presentation is provided in the supplemental financial information included in our earnings release. We're excited to continue innovating in areas like sponsored ads, streaming video, and measurement. Of course, advertising only works if we make it useful for Amazon customers. And when we create great customer experiences, we deliver better outcomes for brands. Second, we're prospectively updating the useful life of our servers and networking equipment beginning in January. As a practice, we monitor and review the useful lives of our depreciable assets on a regular basis to make sure that our financial statements reflect our best estimate of how long the assets are going to be used in operations. We are increasing the useful life for servers from 4 years to 5 years, and network equipment from 5 years to 6 years. As a result, our first quarter guidance includes an approximate $1 billion of lower depreciation expense. We expect the quarterly impact of this change to decrease throughout the year. Although we're calling out an accounting change here, this really reflects a tremendous team effort by AWS to make our server and network equipment last longer. We've been operating at scale for over 15 years, and we continue to refine our software to run more efficiently on the hardware. This then lowers stress on the hardware and extends the useful life both for the assets that we use to support AWS's external customers as well as those used to support our own internal Amazon businesses. And finally, we will increase the price of Prime in the United States in Q1. We continue to make Prime better. In recent years, we've added more product selection available with fast, free, unlimited shipping, more exclusive deals and discounts, and more high-quality entertainment, including TV, movies, music, and books. Since 2018, Prime Video has tripled the number of Amazon originals. And this September, Prime Video will also release the highly anticipated The Lord of the Rings, The Rings of Power, and
Ooh,
become
I'm excited for
the
that.
exclusive home of Thursday Night Football as part of an historic 11-year agreement with the National Football League. Since 2018 in the U.S., availability of same-day delivery has expanded from 48 metropolitan areas to more than 90. Items available for Prime free shipping have increased over 50%. And members have saved billions of dollars shopping on Prime days. This is all on top of new program benefits like prescription savings and fast free delivery from Amazon Pharmacy, and the continually growing Amazon Music catalog for Prime members, as well as Prime Reading and Prime Gaming. With the continued expansion of Prime member benefits and the increased member usage that we've seen, as well as the rise in wages and transportation costs, Amazon will increase the price of a Prime membership in the United States, with the monthly price going from $12.99 to $14.99,
Okay.
and the annual membership going from $119 to $139. This is our first price increase since 2018. For new Prime members, the price change will go into effect on February 18th. For current Prime members, the new price will apply after March 25th on the date of their next renewal. With that, let's move on to Q&A.
All right, so here's the Q&A, guys. So overall guidance for the first quarter is rough.
At this time, we will open up for questions.
But
we ask each
I think they'll be okay. Guidance for the first quarter, they're looking a little bit rough. They said it's going to be a little bit. They said it's going to continue to struggle.
On your keypad. We ask that when you pose your question,
because
you pick
of
up your handset to provide optimal
the holiday
sound quality.
season being over, it's going to be lower than the fourth quarter.
Please press star then 1 on your touch tone telephone at this time. Please hold while we poll for questions. Thank you.
All right. So yeah, first quarter guidance is rough for next year or for this year. Basically, because of inflation, they think the struggles are going to continue.
From Eric Sheridan with Goldman Sachs. Please proceed with your question.
Thanks so much for taking the question. I want to come back to the comments in the release by Andy on same-day delivery. Can you talk a little bit about how many of those investments might be behind you versus ahead of you with respect to same-day delivery, and how that sets the company up with respect to either consumption behavior by consumers versus the competitive dynamic you're seeing against elements of like omni-channel and last-mile delivery competitors? Thanks so much.
Hi, Eric. Sure thing. So, you know, on same day, again, there's multiple levels of fast shipping here from ultra fast, which is essentially our grocery business in 1 to 2 hours, to same day and less, and then 1 day and 2 day Prime. We feel good about where we are. We're continuing to build capacity that enables us to hit those cutoffs. I think his comments were more around getting us back to our pre-pandemic levels for 1 day delivery and improving upon that, and then getting same day to more and more metropolitan areas. We're doing that globally as well, but we really think that combination of speed for different product levels, or product lines, really resonates with customers.
Let's see if somebody's brave enough.
There's a lot of new offers for generally free shipping on a fast basis, but we know how hard this is, and our goal is to do it and do it at a price that we can make money on as well.
I got this mic today.
Structure commensurate with that. So that's where the difficult work comes in. But we like the progress we've made developing our Amazon logistics capability over the last few years, and we've been adding, as we've mentioned, we've doubled the capacity in the network over the last 2 years. That is not all just to handle today's volume, it's also to handle getting closer to the customer and being able to ship faster. So we like where we stand.
James.
We know there's work to do on improving our customer service. We like the progress we've been making.
Yeah, 3,400 is possible.
We think the future is bright on that dimension.
Let's see if they bring up Rivian.
Our next question is from Brian Nowak with Morgan Stanley. Please proceed with your question.
Thanks for taking my questions. I have two. Brian, the first one, there's a lot that's changed within the retail business, sort of pre-pandemic, post-pandemic. More same day, more grocery, more last mile investments, and an ad business. Be curious to hear, as you think about the long-term profitability of the retail segment, has your view about how you think about long-term profitability or cash flow of retail fallen at all post-pandemic because of the higher required investments? Is the first one. Then the second one, like the new disclosure, be curious for any other disclosure about the number of engineers or the size of the teams you have working on a lot of the innovation that you talked about, and that are sort of more around early stage non-revenue generating projects, so we can better understand that investment in Amazon. Thanks.
Sure. On the second one, we have a history of making long-term bets for customers, and some of those fall into very small, short-term revenue businesses. They'll generally roll up into other revenue, which you see is very small after we've separated out advertising. So, I think that you do see it in our revenue disclosure generally, but a lot of our profitability is shown at the segment level, and we'll continue to do that with the revenue disclosure. You asked about the business model. I think it's a good question. And we are, as we reflect over the last 2 years, we are encouraged by a lot of things. You checked them off there: the adoption of digital benefits, the use of grocery, and how valuable that's become to customers. Not to mention the acceleration of companies going to the cloud. The ability to double our fulfillment capacity over that time period, including making major strides in our Amazon logistics, sets us up well for the future. But we've been also dealing with a lot of disruption during this time period. So the early wave of disruption was handling volume without the capacity to handle it, and then quickly playing catch up. And as that was starting to improve, labor took a turn in the United States, especially labor availability, and we've really had to scramble to add workers. We've been successful at it. We added over 273,000 employees in the last half of last year. But I think if you look at the prior year, it was over 400,000. So, there's a lot of expansion that's been going on in the network, and we feel good about the basic contributors of profitability. There's
no worries,
if you take
Tyler.
a step back, there's procurement margin and working with vendors and sellers as well. There's fees in some cases for 3P services and Prime, as we just mentioned, is going up. Advertising has certainly added a layer of contribution over the last few years. But again, that only works and is only successful if we make it a good customer experience. So we're really working hard to do that. And that becomes a part of our ability to offer lower prices, better selection, and more convenience. So if you take those are all stable and strengthening areas. It's really the onus on us is to get our operational efficiency back in all of our areas of cost. We have built a lot of capacity. We've hired a lot of people. Some of those people are still, our teams are all battling Omicron right now, but we do see the sun coming out and getting better here over the next number of quarters, and that's going to be where we're going to put a lot of our effort.
Interesting answer.
Our next question is from
Rivian.
Doug Anmuth with
Stock split.
JP Morgan. Please proceed with your question.
Thanks for taking the question. Brian, you doubled your fulfillment network and also your headcount over the past 2 years. I believe you're about 2.5 years into this investment cycle. Where is Amazon in terms of emerging from this investment cycle? Can you see a slowdown in that big investment spending this year?
Sebastian, I'm typing the answer.
Let's talk a little bit about capital expenditures, and I'm going to do this with inclusion of equipment finance leases, which is the residual that we sometimes lease on our infrastructure assets. We're doing less of it now, but we still do some and have done it historically. So when you look at those numbers and how they've grown over the last few years, I'll give you the proportions, which I'm not sure we've initially shown before, is about 40%, just under 40% of that CapEx is going into infrastructure, most of it feeding AWS, but also certainly Amazon is a large customer of that as well as we build infrastructure for ourselves directly or through AWS. About just under 30% is fulfillment capacity, building warehouses. Warehouse only, not transportation. And then just under 25% is transportation capacity and building out our NCL network, principally globally. The remaining 5% or so is small things like offices and stores and other capital areas. But those are the three main areas. If I look to the future, we're still working through some of our plans for 2022. But it's coming into focus a bit. We see the CapEx for infrastructure going up. We still have a very fast-growing business that's growing globally, and we're adding regions and capacity to handle usage that still exceeds revenue growth in that business. So we feel good about making those investments. On the fulfillment center side, that's about 30%.
Look at Amazon Pop, guys. Look at it right now.
Years. We see that moderating, and that will probably now match growth of our underlying businesses. I think there's always things that can tick up that growth rate, things like expansion of our FBA business, expansion of Cube that maybe not be different than the square footage. So, there's we want to have capacity to have a healthy retail and FBA
No worries,
businesses as
Sebastian.
fuels Prime in 1-day delivery and 2-day delivery and same-day delivery. So that's very important. But we see the FC piece likely moderating this year. And then the third piece is transportation. We still see additional levels of investment in that in 2022.
Yeah, I want to see a Rivian question.
So if you wrap that up, we expect CapEx, including equipment finance leases, to increase year over year. I can't give you the exact percentage, but hopefully it gives you a little more dynamic on how we approach it.
Yeah, look at that bounce on Amazon, guys. Amazon
Our
has
next
bounced up
question is from
about $100
Mark
a
Mahaney
share
with Evercore ISI. Please
in the
proceed
last
with your question.
5 minutes.
Okay, thanks. You'd lay out all of these costs that you were
Yeah, it's
expecting
certainly
to
possible.
see in the,
I mean, it might happen in the next
in
20
the
minutes.
December
But
quarter.
who knows?
Just talk through whether there were any real surprises to you. So it looked like you had a little bit greater leverage than you may have thought, and then use that to help us think about what the
250s right
like
here.
you said, the sun's coming out. Financially, does that mean that we're going to have a kind of nice improvement in operating margins as we go through the year, as some of those temporary costs get temporized, and you get to absorb some of the more fixed costs? So just talk about where the surprise was in terms of those costs that you laid out for the December quarter, the $6 billion, and how we should think about those playing out, as we go forward. Thanks a lot.
Okay, Mark. Just remember that I'm sitting in Seattle, so my view of the sun coming out is a little different than perhaps where you are. But no, we do see things improving. Let's step back to Q4. We had said that we would have about $4 billion of additional costs due to labor shortages and the inefficiencies of that cause, as well as increased labor rates and shift differentials of premiums and external transportation costs.
Higher.
We came in just slightly over that $4 billion. I think things went as expected. I would say that the hiring was strong, but we could have done better. We could have had more people, so we had to cover there was additional overtime. There was some higher costs on third-party transportation. But all in all, the challenge in Q4
Workforce was
just
more
staff,
expensive, $4 billion more expensive than what he expected, basically.
Increased the staffing. And we said we wanted to add 150,000 people or more. We added net about 140,000 in the quarter, 273,000 in the second half of the year. So as you turn the page into 2022, we feel better about labor, except Omicron has kicked up, and now you have a different type of labor issue where there's a lot of people who are on leave of absences and short term as they work to have a positive test on COVID and can get back into the workforce and protect their fellow workers. So there's instances where you're paying twice or three times for the same labor hour. If someone is on leave, you're paying them, and you're also paying potentially for someone who's covering the shift on overtime. So, there's cost pressure in Q1. I think the good news is that the labor challenge is not as great in Q1 as it is in Q4, and Q3 and Q4. So we're hopeful on that. We have to work to now make our operations more efficient as we get staffing levels up. And we're going to.
And this is what happened to every company.
Increasing our transportation speeds and beating our pre-pandemic levels. So there's a lot of different challenges going on right now. The team has, been working, heads down for over 2 years now. So they need, we got a great team, and
I don't think they've even mentioned a stock split, though, guys. I think it would be good if they did one.
So hopefully that answers your question.
I don't think they mentioned it. So I think it's just rumors.
Our next question is from Colin Sebastian with Baird. Please proceed with your question.
Thanks, and hey, Brian and Dave. Wanted to ask about AWS and nice acceleration in revenues there. Wondering if you could talk about maybe more specifically the drivers of that acceleration. Is the application layer maybe now large enough where you're seeing that contribute incrementally to growth? And I think in the release you also highlighted infrastructure expansion globally. I think it might be interesting to add some context around the scale or distribution of the AWS business internationally outside of North America. If you could put some context around that, thank you.
Sure, Colin. Thanks for your questions. On the growth rate, I think it's a combination of things. We've been adding resources in sales and marketing over the last few years, and that is starting to pay off. There was some cutback in spending in the early parts of 2020 that we're
Unlikely,
lapping
Veronica.
as people, different companies had different COVID experience. Some, their volumes went through the roof, some, their volumes went through the floor. So as things have stabilized, I think the lasting thing is that a lot of people made the commitment to go to the cloud, better understood the benefits of that, and probably accelerated their internal timelines for that. And we're there to help, and we're working very hard to make that journey a successful one. And we have a strong team of sales and marketing professionals to help, as well as technical advisors. So, that is what we're seeing, and we're pleased with the acceleration in the business the last 4 quarters. We will see. We're also pleased with the efficiency of the infrastructure investment, as I mentioned. The expansion of useful life is not done on an accounting basis unless you have proof that it's actually we're seeing it in real life. So, very positive indicators in AWS.
Hey, Colin.
Yeah, I think that's
Dave,
unlikely,
just
Sid.
following up on the international point.
You would have to
what we're seeing
retrace
outside of the
under
US. I mean, we are
previous close.
as part of that overall strong growth. We are continuing to see considerable momentum really around the world. It's customers moving their workloads over to AWS at different phases. And so as you look at the release and some of the other announcements, there's a good diverse list of companies. Adidas in Germany migrated its SAP environments to AWS. In the Netherlands, Stellantis selected AWS as its preferred cloud provider. There's a number of really great companies examples that doing different big things at different stages of that migration. What's been important to us, amongst many things, is continuing to expand our global infrastructure footprint, really to support this momentum we're seeing. So just this last quarter, in the fourth quarter, we opened the Asia Pacific region over in Jakarta. And we've got announcements for plans to launch in Canada in the Calgary region next year, or perhaps I think it's 2023 or 2024. So a lot of work and a lot of momentum there. Those are just a few examples. But where we sit now, it's AWS has 84 availability zones in 26 regions around the world right now. And just in terms of the forward-looking roadmap, we have announced to launch 24 more zones and 8 more regions, and those will be here in the next couple of years.
Interesting. Yeah, look at Snap spike up over the last
Our next
2
question is
minutes.
from Jason Helfstein
Also,
with
Amazon.
Oppenheimer. Please proceed with your question.
Amazon testing 3,200.
Thanks. So I just want to dig a little bit into third-party seller services. The growth slowed there.
Selling
even on
used
a
products
2-year
and
stack.
private label products
So
on
maybe
Amazon.
if you could talk about some of the factors that you think could be weighing on that. And then just on AWS, you kind of laid out some color there. Is there any bottlenecks to growth that you're still seeing? I mean, you talked about why this was a very good quarter and having to do with some of the comps, but any bottlenecks to growth, either supply chain or employee related? Thank you.
Sorry, Jason, is your second question on AWS?
Yeah, on AWS.
Okay.
Yeah,
let me start with that. Yeah, sorry, let me start with that. No, we don't see bottlenecks on the capacity side, or probably the limiter in that business is our ability to work with customers to accelerate their timelines. So we're investing and working hard to do that. But operationally, we continue to add capacity, as I mentioned on the capital discussion, and we expect that to increase year over year in 2022. On 3P,
Amazon's testing 3,200.
I think what you're seeing is a decreasing growth rate, much like the rest of the business. As I mentioned earlier, we're dealing with the very high growth period from Q3 of 2020 through Q1 of 2021. But on a 2-year basis, you're still seeing 31% compounded annual growth in the 3P seller services revenue. Granted, that was it was 34% last quarter, but it's maintaining. I think the bigger point is that sellers were definitely big winners in Q4. The percentage of units up to 56% was a record for 3P. We continue to invest a lot to make sellers help sellers be successful
Not
on our
yet,
site.
Stephen.
They're a big consumer of advertising as well because they use it to build their brands and enable customers to see their selection and make purchases. So we're very happy with the third-party seller services business, and again, looking for ways to help sellers be successful.
Our next question is from Justin Post with Bank of America. Please proceed with your question.
Great. Maybe you'll talk about advertising services. Maybe tell us why you decided to break it out, if you haven't already, and then how much Prime Day might have been a factor in the deceleration. But bigger picture, how much room does that line have to grow bigger than GMV growth? How do we think about where you are on penetration on that? Thank you.
Yeah, let me start with why we broke it out. We've looked at the proportion of other revenue that is advertising services, and we got to a point where I had been pretty much mentioning every quarter that for the majority of that line item was advertising revenue, and we feel it's at a certain size that we should break it out and then split the other off of that. So that was really the impetus for the change, and we look at those things every year, and end of year was a good time to do it as we start 2022. So hopefully that's helpful for you to understand the growth rate without having to impute it from the other revenue. The growth rate in the quarter, 33%, was down from 66% in Q4 of last year. Q4 last year obviously had Prime Day in it for the first time, and Prime Day carries a lot. I can't scale it for you, but there's a lot of advertising tied to Prime Day, obviously. So when that moves quarters, it generally has an impact on the run rates. We saw that a bit in Q2 of this year when we did have Prime Day, and it was lapping Q2 2021 was lapping the 2020 period that didn't have a Prime Day in it.
There's 3,200.
So, that'll move around a bit, but I think the bigger story here is the success we're having with sellers and vendors and making that a useful product for customers.
And Justin, just to add to that, I mean, it's the priorities with advertising are, at a high level, it's improved the tool usability. We think there's great feedback loops with customers, as Brian mentioned, to keep building and making that better. That results in building more relevancy and better engaging experiences. And again, the more we can interact with the advertisers, the customers, and learn and have more opportunities to hear from them and understand that we can build better analytic tools, provide better measurement, give them better insight into performance. So really focus on serving brands. And it's in the sponsored ad space, but we've talked about video advertising is certainly a great opportunity. And as we've got properties like Fire TV, IMDb TV, Twitch, live sports, a lot of exciting things that have been going on in live sports, and certainly to come this year as well, both in the NFL here in the U.S., but overseas in a number of properties. Really excited to kind of work with folks, and again, this is about delivering good recommendations to customers and helpful when they're making their purchase decisions and giving them information around that. And that in turn, of course, helps the advertisers as well and have a great result. So I think that's one area that we're excited about. And I think longer term, demand side platform opportunities with Amazon's DSP is something that we're continuing to work on and refine and again, focus on the customer as we always do.
Right. So Amazon partnered with Thursday Night Football in the NFL.
Our next question is from
I'm going to have to watch Thursday Night Football on Amazon Prime.
Please proceed with your question.
Answer in the chat if you know.
Great, thanks. Two questions. First, could you discuss how the supply chain affected the business in 4Q and how we should think about perhaps impacts from supply chain issues in 1Q22 and for the year? And then the second question would be, do you expect to increase Prime pricing in non-US markets? Thank you.
Hi, John. Thank you for your questions. First on Prime question, we evaluate each country differently. We look at the relative price to the customer versus our cost to supply that and the usage and the value that we're creating for customers. We felt, especially after not raising the price in the United States since 2018, that the time was right to raise it. And we think it's a much more valuable program today than it was in 2020, let alone 2018. So other countries will continue to evaluate every year, and nothing else to announce right now. On supply chain, there's specific things that I think we all see in the supply chain where we're waiting for products. But as far as Amazon is concerned, we did a lot to combat the supply chain issues we saw in Q4 or anticipated in Q4. We bought product ahead. We worked with vendors to secure inventory early, in some cases paid early, which had a working capital impact. We also worked very hard to open up channels of existing channels of input into the country, whether it was port capacity or a vessel capacity. So we did everything we knew how to as far as trying to get more capacity in a constrained market. And we think it worked for our customers in Q4. As challenges remain in 20, I wouldn't say we've totally passed that, but we don't expect it to be a big issue in Q1.
Our final question is from Dan Salmon with BMO Capital Markets. Please proceed with your question.
Good afternoon, good evening, guys. Thanks for fitting me in. First, I just wanted to follow up a little bit and see on the advertising numbers, if there's any qualitative color that you could add, say, rough balance of performance advertising versus brand advertising, maybe U.S. versus rest of the world. Anything you add could be great. And then just second, Brian, you mentioned the exclusive broadcast of Thursday Night Football as one of the reasons supporting a higher price increase for Prime. Dave, you mentioned it as an element that is a dynamic new one for the advertising business. Maybe could we just return to that point as the sort of importance of live sports in the video space is incredibly important. Is that one that you see kind of taking the business to a new level at this stage?
Sure. Let me start with that second question. So I didn't want to leave you with the impression that we raised prices because of Thursday Night Football. I just use that as an example of great new content that we've been investing in for Prime members to make the Prime membership more valuable, as well as international sports. We had one of the highest rated games in the Q4 with, I believe it's Manchester United, and I'm going to mix up the teams. Sorry. Yeah, I won't embarrass myself. But so again, we've been working on getting sports properties that will be beneficial and valuable to a Prime offering. We're still probably early on in that. We've had obviously success with Premier League soccer, other soccer leagues around the world, tennis properties, and also probably the marquee is the work with the NFL on Thursday Night Football.
Okay.
Dan, in terms of just a breakout, I think as we've said before on the advertising side, the sponsored products and brands, they make up the majority of the ad revenue today. We haven't given a split on a geographic basis, but suffice to say, a lot of these efforts, as Brian talked about, whether it's on the video advertising opportunities or in those sponsored products and sponsored brands efforts, we've replicated a lot of the tools and features and services around the world and are kind of constantly learning and building out the brand and the presence with that so we can make better inroads with customers over the long term.
Let me know if you can hear the conference call when I mute it like this right now.
Dan, the Manchester United and Arsenal soccer game in December was the most watched Premier League match ever on our service with an estimated viewership of 4 million. So I think that is actually pretty interesting because we've had a lot of increasingly good relationship with the Premier League. We've had Boxing Day games, and we continue to be a valuable partner for each other.
With that, thanks for joining us on the call today and for your questions. A replay will be available on our IR website for at least 3 months. We appreciate your interest in Amazon and look forward to speaking with you again next quarter.
All right, guys. Well, that was it. That was the Amazon conference call for the earnings release. Listen, guys, if you want to follow more of our content, we stream live every day. We drop stock market news live every weekday morning, live on stream for free every single weekday morning. Our big thing here is we don't sell a course. We don't sell a service. We don't claim to be an expert. We give everything away for free. We don't charge for any of our content. And so if you appreciate that, hit the like button, hit the subscribe button. Also, guys, go check out our latest video dropping on our favorite scalping 1 minute momentum method of like identifying momentum and scalping in the markets. I've been trading for years and years, and it's just a free video. So, check it out if you want to see what we do, how we scalp, and, you can watch it, get a little bit deeper understanding of candlestick movement. The link right there, go give it a watch. And right now we're consolidating between 3,100 and 3,200. I had a few people ask, can we hit 3,250 today? I think we certainly could. I'm not saying we will, of course. Nobody really knows what's going to happen, but we certainly could. It's definitely in the realm of possibility. Now, I'm not saying it will, but we'll have to wait and see. Considering the current range of Amazon, it's certainly possible that we could, but we'll have to wait and ultimately see what happens. But yeah, guys, hit the like button, hit the subscribe button. From now on, we're going to start doing these every major earnings release and earnings call. We're going to start dropping on this channel. All the major news we're going to be dropping on this channel as well. And again, we'll be back tomorrow morning, bright and early at 7 a.m. market time. So hit the sub button, hit the like button. I appreciate you guys being here. And nice meeting all the new ones. And we'll see you guys tomorrow. Thanks for watching, guys.